building a multi-million-dollar business with no money down introduction. The concept of utilizing unsecured credit to finance a business venture is a powerful strategy that can potentially allow you to build substantial wealth without initially using your own funds. This approach hinges on understanding how to obtain business credit lines and leveraging them strategically to secure cash flow and asset-building opportunities. By focusing on unsecured business credit, you can utilize these funds with little to no interest in the initial phase, often for up to 1 year, depending on the terms. Footnote: this section outlines the potential of using unsecured credit to finance a business, laying the groundwork for the detailed strategy to be explained further. Understanding unsecured credit. Unsecured credit involves borrowing funds that are not backed by collateral, such as personal assets. For business owners or aspiring entrepreneurs, unsecured business credit is a critical tool. It can be obtained through business credit cards or lines of credit, provided certain qualifications are met, such as a good personal credit score and the establishment of a formal business entity. This section outlines how unsecured credit can be used to fund a business and start building wealth through strategic financial management. Footnote: this section highlights the role of unsecured credit in funding a business, emphasizing the importance of establishing proper business structures. Starting a for-profit corporation. To unlock the potential of unsecured business credit, it is vital to form a legitimate business entity. While LLCs are common, a for-profit corporation is often a better choice, particularly for those who want to protect their assets and maintain privacy. A corporation can be set up in various states, including those that offer anonymity, such as Delaware, Nevada, New Mexico, and Wyoming. These states allow for the creation of a corporation without revealing the identities of the owners, which can provide additional peace of mind regarding asset protection and privacy. Footnote: this section stresses the importance of forming a proper business entity to qualify for unsecured credit and outlines the advantages of forming a corporation, especially in certain states. Obtaining an EIN. Once the for-profit corporation is established, the next critical step is obtaining an Employer Identification Number, EIN. The EIN functions similarly to a Social Security number, SSN, but for your business. This number will be required when applying for business credit, as it identifies your business for tax purposes and is often necessary for opening business bank accounts. The EIN allows your business to operate legally and access financial products in its name rather than your personal name. Footnote: this section explains the importance of obtaining an EIN for your business, which is crucial for qualifying for business credit. Applying for business credit. Once your corporation is established and your EIN is obtained, you can begin applying for business credit. Many business credit card companies, such as Chase Inc., offer substantial credit lines to new businesses that meet certain criteria. To qualify for such credit, you will typically need a personal FICO score of 750 or above. This section explains how to apply for business credit, what the eligibility requirements are, and how a strong personal credit score can increase your chances of approval. Footnote: this section details the process of applying for business credit and the importance of maintaining a strong personal credit score to secure favorable terms. Using 0% APR for business growth. One of the most attractive aspects of unsecured business credit is the ability to access funds with 0% APR for an extended period, often up to a year or more. This offers an excellent opportunity to invest in a business without the pressure of interest payments. With strategic planning, these funds can be used to purchase an existing cash-flowing business or invest in business operations that will generate profits, allowing you to pay off the credit before the interest rates increase. Footnote: this section focuses on the strategic use of 0% APR business credit to finance investments in business ventures and the importance of paying off debt before interest rates kick in. Acquiring a pre-existing business. A key strategy in utilizing unsecured credit to build wealth is to purchase a pre-existing business that is already generating cash flow. Websites like Flippa.com allow you to buy businesses that are operational and profitable, requiring minimal effort to maintain. This eliminates the risk and difficulty of starting a business from scratch. Once the business is acquired, you can focus on managing and scaling the operations, using the cash flow generated to pay back the credit extended. Footnote: this section highlights the benefits of acquiring an established business, allowing you to immediately generate cash flow and use it to repay business credit. Wealth building through business credit. Once the business is generating sufficient cash flow, the goal is to use that income to pay off the credit lines while continuing to build wealth. This involves using the profits to settle debts and reinvest in the business for further growth. Over time, this cycle of using business credit to acquire profitable assets can lead to significant wealth accumulation. The process is scalable, enabling you to acquire multiple businesses and diversify your portfolio over time. Footnote: this section illustrates the wealth-building potential of using business credit to acquire profitable assets and highlights the importance of reinvesting business profits to fuel further growth. Conclusion: leveraging unsecured credit to build a business and accumulate wealth is a strategy that can provide significant financial opportunities when used correctly. By forming a for-profit corporation, obtaining an EIN, applying for business credit, and investing in profitable ventures, you can generate wealth while minimizing the financial risk to your personal assets. However, it is crucial to manage this credit responsibly and ensure that the borrowed funds are used to generate profitable returns that can be reinvested to sustain long-term growth. Footnote: this section concludes by emphasizing the potential of unsecured credit for business expansion and the importance of responsible management.